All right, let's kick things off. Welcome to our deep dive, everyone, into BP's 2023 annual report.
Yeah, it's gonna be an interesting one, I think. There's a
This
lot going on.
There is. This report, it really is our roadmap for, well, for understanding how this global energy giant, how they're trying to, to balance those massive oil and gas operations that they have with this big push that they're making towards more sustainable solutions.
It's certainly a fascinating time for them for sure.
It is. And we're going to dissect it all, right?
Yeah.
We're going to look at their business segments. We'll unpack their financial performance. We'll even look at how they plan to keep their shareholders happy through all of this. So let's start with the foundation. Let's start with what they call resilient hydrocarbons, which I don't know about you, but it kind of feels like a bit of a tightrope walk to me. They're trying to squeeze every drop of value out of oil and gas while simultaneously trying to lower emissions.
Yeah, it definitely is a balancing act, but it's one that seems to be working out pretty well for them, at least financially. I mean, this segment brought in, a huge amount of profit, $11.2 billion to be exact, before interest and tax. And that's in a year when energy markets were pretty volatile too.
Yeah, no, that's a massive number. But it's not just about profits for BP. I was looking through the report, and I was really surprised to see that their refining availability actually went up in 2023. It reached 96.1%.
Oh, wow.
Yeah, and they specifically called out the fact that they had fewer unplanned maintenance issues, which suggests that operationally, they're really running a tight ship.
Yeah, efficiency is absolutely key, especially when you're trying to, maximize returns from a resource that's facing increasing scrutiny. But, it's interesting to see that while they're focusing on that side of the business, they're also investing heavily in what they call transition growth engines. This is where those plans for the future, for a lower carbon future, really start to take shape.
Yeah, that's the part I'm really curious about. We're talking bioenergy, EV charging, hydrogen. It feels like such a departure from their traditional business.
Yeah, they are very different areas,
Mm,
but they're crucial for BP's long-term strategy. Let's just take EV charging, for example. They're making a big push in the U.S. market, like a $500 million investment planned in the next few years.
yeah.
Big.
Wow.
Yeah, and they even struck a deal with Tesla to install those ultra-fast chargers, across their network, which is actually a first for Tesla.
It is. It's huge. I mean, that's a pretty big deal. It definitely shows how serious they are about grabbing a piece of this growing EV charging pie. And it's not just about the charging stations themselves, is it? They're partnering with companies like Uber to help electrify their ride-hailing fleets. Yeah. So they're really trying to get into that whole ecosystem.
Yeah, exactly. It's about finding multiple ways to kind of get into this, into this new energy world. And we can't forget about bioenergy either. BP acquired Archaea Energy, which, puts them in a good spot for producing renewable natural gas from landfills and agricultural waste. They even launched a new plant this year in Indiana.
Wow. So they're moving beyond, the traditional biofuels, looking at a wider range of options. It's interesting, isn't it, how much ground they're trying to cover. But how is all this impacting their bottom line? I mean, we need to see the financial picture here, right?
Right. Yeah. Well, overall, 2023 was a year of recovery for BP. They went from a loss in 2022 to a profit of $15.2 billion, which is attributable to shareholders.
Wow, that's a big turnaround.
It is. Their underlying replacement cost profit, which is kind of a way to look at their real earnings power, by
Yeah.
taking out things like the changes in oil prices, that was $13.8 billion.
Hold on. Can you break down that underlying replacement cost profit for me a little bit? I mean, what exactly does that mean in plain English?
So it takes out, the temporary factors that can really skew those reported profits. So things like fluctuating oil prices, changes in, in inventory values, things like that. It gives you a more stable view of how well their core business is doing.
Okay, so stripping away all the noise. Got it.
Yeah.
So $13.8 billion in underlying profit, that suggests their core business is pretty solid. And that's important, right?
Yeah.
They need that strength to fund all these other initiatives.
Absolutely. Yeah, they need that consistent profitability to fund those investments in the transition to lower carbon solutions. Now, if you look at their balance sheet, it also shows some pretty interesting insights. Their net debt is sitting at $20.9 billion, which it is a large number, but it's actually down from the previous year.
Okay. That's a good sign, right?
Yeah.
Less debt.
Yeah, absolutely. It means they're managing their debt levels, which is really important, especially given the scale of those investments they're making. Now, you'll see the report mentions gearing a lot. Have you come across that term before?
Yeah. I've seen it, but to be honest, I'm not entirely sure what it means or why it matters.
Okay, so gearing, it's a pretty simple concept, actually. It's basically just a measure of how much debt a company has compared to its equity. So, how much of their financing comes from debt. A high gearing ratio means a company is relying more on borrowed money, which can be risky, especially in markets that are, a little bit volatile. But the good news is that BP has actually been actively managing their gearing, bringing it down to a level that's, a bit more comfortable.
So they're trying to strike that balance, using debt strategically, but not getting in over their heads. Makes sense. But let's shift gears a bit and talk about cash flow. That's the lifeblood of any business, right?
Yeah, absolutely. And their operating cash flow, so the cash generated from their core operations, that was really strong in 2023. That's a good sign because it shows that they can actually fund those investments and, keep those shareholder distributions coming.
Speaking of shareholder distributions, I was looking at the numbers. They paid out a lot in dividends last year, over $4.8 billion.
It is a lot of money, yeah. And it really highlights their commitment to keeping those shareholders happy even during this huge transition that they're going through. And on top of that, they bought back a good amount of shares too, totaling $1.262 billion.
Wow. So they're really putting their money where their mouth is. It seems like they're walking that tightrope,
Yeah.
trying to balance investing in the future with keeping those shareholders happy. But some people might argue that, focusing so much on shareholder payouts, while the world's asking them to move away from fossil fuels, it might seem a little, well, a little out of touch.
Yeah, that's a fair point. It's a complex issue with different priorities at play. And there's a lot of pressure on BP to kind of deliver on all fronts. But to really understand how their strategy is working, we need to look at the bigger financial picture, right?
You're right. So let's dig into those numbers in more detail. We've got the income statement, the balance sheet, the cash flow statement. Let's break them down one by one and see what they tell us about BP's overall financial health.
Okay, great idea. Let's start with that income statement. It's the report card, for profitability.
Yeah, I'm ready to see how they scored.
Okay, so that income statement, well, we've already, touched on the fact that they had that $15.2 billion profit for the year.
Right.
But let's dig a little deeper into it. So remember that underlying replacement cost profit that we talked about, the $13.8 billion?
Yeah.
Well, that figure really helps us, kind of smooth out some of that volatility that you just get in oil and gas business. So it gives us a clearer idea of how their operations are actually performing.
Right. It takes out those big swings that can come from the ups and downs of oil prices. But what does that number, that $13.8 billion, what does that actually tell us about BP's strategy?
Well, it shows us that their core hydrocarbon business, it's still going strong. And this is really important, right? Because it's those earnings, those really strong earnings that are giving them the fuel, that they need to be able to invest in all of these lower carbon solutions. And without that financial engine, without that strong core business, that transition would be a lot harder.
Yeah, it's like they're using the profits from the old business to, I don't know, to build a bridge to that new business.
Yeah, that's a great way to put it. So let's move on to the balance sheet. It's a snapshot, of their financial health. And one of the key metrics here is net debt. So their net debt stands at $20.9 billion.
Yeah, we talked about how it's down from the previous year, which is a good sign.
Definitely.
Let's say I'm an investor, right? And I'm looking at this number.
hmm
Should I be worried about that level of debt?
Well, it's always wise to be a little bit cautious about debt, especially in an industry like energy, which can be, pretty cyclical. But, BP has been really proactive in managing their gearing, which, remember, that's the ratio of debt to equity. And they're bringing it down to a much more comfortable level. It really does show that they are committed to maintaining, a pretty solid balance sheet.
Okay, so it's not just about reducing debt, it's about making sure that the debt is at a healthy level compared to their equity.
Exactly.
That makes sense. Okay, so let's look at the cash flow statement then.
Yeah.
And that tells us, how much cash they're actually bringing in and how much they're spending.
Right. And in 2023, their operating cash flow, so that's the cash generated from their normal day-to-day operations, that was really impressive.
Yeah.
And that's like the lifeblood of any company. When you have a strong operating cash flow, it gives you so much more flexibility to invest in new things, to pay those dividends, to pay down debt, all the things you need to do.
So are they actually generating enough cash to be able to do all those things effectively?
Well, To answer that, we need to look at their free cash flow. So that's the cash that's left over after they've taken care of all those, essential investments, those capital expenditures that they need to make to just, keep the business running and growing. And the good news is, yes, their free cash flow in 2023, it was pretty robust.
Okay, so they're making money, they're keeping their debt in check, and they're generating a lot of cash. It sounds like they're in a really good spot to fund this big energy transition that they're talking about.
Yeah, on the surface, it definitely looks that way. But, it's important to remember that their free cash flow this year, it got a big boost from those high oil and gas prices. And there's no guarantee that those prices are going to stay high.
Oh, so it's not all, sunshine and roses. They're still at the mercy of those energy markets.
Exactly, yeah.
Yeah.
It makes their strategy, all the more interesting and challenging. So why don't we take a closer look at that resilient hydrocarbons segment? We know it's making them a lot of money,
Yeah.
but how are they actually managing that part of business, as the world is pushing for cleaner energy?
Yeah. Let's do it.
So yeah, the big picture, it's a really interesting time for the energy industry, wouldn't you say?
Yeah, it's a crazy time.
Yeah.
I mean, it really feels like everything is changing so fast.
It is, yeah. It's like the old playbook. It's being thrown out the window.
Yeah, and there are new players coming in from all directions. It seems like every day there's some new startup or some tech company trying to get a piece of the energy pie.
Yeah, and you've got, all these trends converging at the same time. The rise of renewable energy, obviously, the electrification of transport. I mean, think about how quickly the EV market is growing.
Right. And then you can't forget about the increasing focus on energy efficiency too. I mean, doing more with less, right?
Exactly. And all of that is happening, against this backdrop of geopolitical uncertainty. I mean, the war in Ukraine, it really showed how fragile, our energy systems can be.
Yeah, it really put the spotlight on energy security. All of a sudden, it's a top priority for everyone. Governments, businesses, everyone's worried about where their energy is going to come from.
Yeah, exactly. It's forcing a lot of people to rethink, their strategies. And that includes BP. They're trying to position themselves as this integrated energy company.
Right. So not just oil and gas anymore.
Right. Yeah. They want to be able to, provide a whole range of solutions to meet all these different energy needs, both now and in the future.
So they're kind of hedging their bets a little bit. They're investing in, fossil fuels, but also those low carbon alternatives, trying to kind of anticipate, what the future energy mix is going to look like.
Yeah. But it's not easy, right, to try and balance those different parts of the business. They've got all sorts of challenges they need to overcome, both internal and external.
Like what? Give me an example of, I don't know, of some of those hurdles that they're facing.
Well, internally, they've got to be able to manage, all the complexity of operating in all these different energy sectors. They're making investments in all these different places, and they've got to make sure that everything's aligned, with their overall strategy.
Right. It's like they're running a bunch of different companies at the same time, almost.
Yeah, pretty much. And, another big challenge internally is talent. They need the right people with the right skills and experience to be able to make all of this work, to be able to succeed in all these new areas.
Right. So attracting talent, keeping that talent, that's going to be key.
Yeah, absolutely. And then externally, they're facing all sorts of pressure, right? From investors, from regulators, from activists.
Yeah, to do more faster.
Right.
Yeah.
Exactly. To really accelerate this whole transition and, to reduce their environmental impact, they've got to prove that they're really serious about tackling climate change and to do it in a way that's transparent, that people can see what they're doing.
And all of this while dealing with, with those things that they can't control.
Yeah.
Those volatile energy prices and, those geopolitical risks. It can feel like they're trying to hit a moving target.
It is, yeah. It makes it really tough to plan for the future. But, amidst all these challenges, there are also, a lot of opportunities because this energy transition is creating all these new markets, driving all this demand for innovative solutions.
And BP is in a good position to be able to capitalize on that, right? I mean, with their resources, their expertise.
Yeah, for sure. They could become a leader in so many of these areas. Renewable energy, energy storage, hydrogen, carbon capture, all these things that are going to be essential in a cleaner energy future.
Right. And they've got the infrastructure already in place. The pipelines, the refineries, the relationships with customers.
Yeah, exactly. So they have a lot of, of building blocks they can work with, but of course, it all comes down to execution. They've got to make the right investments, build the right partnerships, develop the right capabilities.
And they got to do it all quickly. I mean, things are changing so fast in this industry.
Yeah, the window of opportunity, it might be closing. They can't afford to just sit back and wait and see what happens.
It really does feel like a race. With pretty high stakes, too. Okay, so let's have some fun with this. Let's imagine, what the future might hold for BP. What are some of the ways this could all play out?
Okay, let's put on our futurist hats here and think about some different scenarios. So, scenario number one, let's call it smooth sailing. Everything goes according to plan. BP manages this whole transition perfectly. They become a leader in both traditional energy and those low carbon solutions.
So they have their cake and eat it, too, right?
Mm.
Profits are up, share prices soaring, everyone's happy.
Yeah, that's the dream scenario, right? But then there's scenario number two. Let's call it rocky road. So in this one, BP, they kind of struggle to adapt. Maybe they're slow to invest in those new technologies. They miss out on some key opportunities.
They get stuck in the past a little bit.
Yeah, a little bit. And then they start facing, all this criticism for not doing enough, about climate change. Their profits start to decline. Their share price flatlines. Investors get nervous.
That's, not a good place to be.
No. And then there's a third scenario, which is, I guess you could call it disruptive transformation. So in this one, everything just accelerates much faster than anyone expected.
Oh, wow.
Yeah. New technologies come along that just change everything. Governments get really serious about climate policy. And companies like BP, they're forced to make some really big changes.
So they're not just dipping their toes in the water anymore. They're diving in head first.
Yeah, exactly. I mean, they might even have to think about, splitting the company, having one part that's focused on, the fossil fuels and another part that's all about low carbon energy.
Wow. That'd be a huge change.
It would. But, in that kind of scenario, it might be the only way to survive.
It's fascinating to think about all the different ways this could play out, isn't it? I mean, we've only talked about 3 scenarios, but, there are endless possibilities.
Exactly. But I think the key takeaway is that, this industry it's in a constant state of change. It's really unpredictable. And BP is right in the middle of it all. And they're making decisions now that are going to have a huge impact, not just on them, but on the whole energy landscape.
So let me ask you this. Why should our listeners care about all of this? What does it mean for them?
Well, I think it's important for everyone to be aware of what's happening in the energy industry. It's going to affect all of us in so many ways. And, we need to be informed. We need to ask questions. We need to hold companies like BP accountable.
Right. This isn't just about, about BP's bottom line. This is about the future of energy for everyone.
Exactly. We're all in this together, whether we like it or not. And the decisions we make today, they're going to have a huge impact on the world we live in tomorrow.
That's a really good point. So we've covered a lot of ground today, haven't we? We talked about BP's different business segments, their financial performance, how they're approaching shareholders.
Yeah, we looked at the big picture, the trends that are reshaping the energy industry, the challenges BP's facing, the opportunities they have. We even tried to predict the future a little bit.
We did. It's been a fascinating deep dive. But before we wrap up, I want to leave our listeners with something to think about.
Okay, what's that?
Given all the complexity, all the uncertainty that we've talked about, what role do you think individual investors should play? How can we use our investments, to help shape a more sustainable energy future?
That's a really good question. It's one that, that every investor should be asking themselves. It's about more than just, about picking stocks. It's about aligning our investments with our values.
Right. It's about recognizing that we're not just, passive bystanders. We can actually make a difference, even if it's just a small one.
Yeah. I would encourage everyone to do their research, to think about what matters to them, and to choose investments that reflect their vision for the future.
Really well said. So that brings us to the end of our deep dive into BP's 2023 annual report. It's been a pleasure exploring all this with you, and I want to thank everyone for listening.
Yeah, thanks for joining us.